Hello, everyone. Good afternoon. I think it was a busy day for everyone the last 2 days, and it's going to continue the whole week. Very happy. I'm Farbod Sadeghian from the block, and let's start kick off with some questions. I didn't know I'm moderating today, but it was morning. Still, I tried some things together. Um, I would throw the questions, and I would love that anyone just engaging with what we are uh, discussing today. One of the matters is the institutional investment into virtual assets is growing globally, is accelerating. And the problem is always adoption with the regulation. And I would love to know how your companies are adopting to the regulation. We have the MiCA, we have the VARA, we have a lot of various topics that in each country we have different regulations. And I would love to know how we are expanding into the market. Is it that you're using third parties, or is it that you want to apply for licenses globally? How your company is going to go into the different regulations? I leave it to George to start
Yeah,
with.
sure. Hi, everyone. My name is George. I represent Lionsoul in the Middle East. We're a digital asset manager. So I can maybe give you my view from the Middle East region. Obviously, globally, in our field, the regulatory hurdle was the biggest one to cross. So I think we can all agree on that. And if we had this discussion 5 years ago, I don't think we would have dreamt that we would be where we are today. I think what has happened in the last 2-3 years, at least from our side, has been very important for the space. So locally, we're lucky. I mean, I've been here 13 years, and locally, we're lucky to have a very forward-looking regulator that's been, I would say, avant-garde in everything, not only crypto, even in AI. You know, we can see this paying off today with the explosion of AI and LLMs and all verticals. But in our world, and crypto, VARA and ADGM and the SCA that's catching up today, you know, have all been kind of preparing for this moment. So for us, with Lionsoul, as we are a global brand and we just started in the Middle East in March, we decided to go through partnerships. So
Okay.
I know that it's very catchy to come here and set up an ADGM, set up in the SCA, but I think for us, the lowest hanging fruit are people who already have their own distribution networks. A lot of traditional digital asset managers locally are already distributing very good products on all verticals of investing. But I think on the digital side, there's still a need. And where we address, through partnerships like, with the block, with Altnovel that we just launched in ADGM. We also have a partnership with the VARA entity. For us, going on this B2B2C route is what makes sense. And obviously educating our clients and the businesses around us on the asset class and helping them distribute these products with the best educational knowledge to their clients, so their clients can make the decisions and see if this fits in their portfolios or not.
Going with partners, it's actually time. I understand it. So, how you manage the risk? I mean, because you're going through partners, and how you do the risk assessment. We have Henson here. I think you had a lot to win that. If you partner, like using other brokers, using other distributors, there's a lot of matter needs to be monitored, needs to be managed. How we go with that one?
Yeah, great question. And just quick background. So I'm Henson Orser, and I'm founder and CEO of Soter Insure. Prior to launching Soter in March of 24, I was the first CEO of VARA, the regulator down the road. And so just think about regulatory equivalence and passportability. At VARA, when we launched it in 2023, rather than call something a securities or a commodity and have that be the regulator that would look at it, we called everything virtual assets, and then tried to have sort of a high threshold as to what every operator, how they had to operate in areas of FATF compliance, on-ramp, off-ramp, AML, auditing, segregation of client assets. You want to have any regulated entity operating at a certain highest standard. And as we think about these global networks, global order books, global businesses. I think what you want is to get this passportability and equivalence of all the local regulators, and we're seeing that come online with what's happening in the United States and MiCA and Hong Kong and Singapore, so that you get local capture into these awesome global network states, which everybody's excited about, and Web 3.0, and that'll apply to games that have 2 billion users, and there's exchange of value in them. It'll be applicable to all these things we're excited about. We saw that we required all our viral licensees needed to get insurance, and for us, the intersection of innovative insurance, digital assets, TradFi, we got licensed to operate out of Bermuda. And so we're an Abu Dhabi holdco and a Bermuda opco, and we're offering insurance product to financial institutions that operate in digital assets, and not only offering that in fiat, but we underwrite in Bitcoin and Ethereum as well. But as far as thinking about local partners, we'll be looking at all the viral licensees, helping them get the requisite insurance, as well as every other jurisdiction. But we do need to think about how do we satisfy the central bank of the UAE, who is the insurance regulator for the UAE. So we'll find a very well-capitalized local partner to actually underwrite the insurance and then reinsure with us. And once again, at the end of the day, that's for the consumer's protection, that if things go bust, there's a well-capitalized local insurer that's responsible for paying the claim if somehow this entity out of Bermuda becomes insolvent and can't pay at the end of the day.
Okay, great. Well, I didn't know about it, now learned more. It means we go to Soter for all the licensees. And I would like, Sebastien, if we jump into the RWA, DeFi asset management, and what you guys are doing. If you do an introduction, please, and then let's jump into the asset management part.
Sure. So I'm representing Laser Digital. We are a full-service company, and we are regulated by default by Variant DGM because RM was to be institutional since the very first days. Just a word about that. The complexity now, I think, is to articulate innovation with regulation. And essentially, to jump on your question, if we address the field of RWA, that comes along with what you do in terms of on-chain asset management. So in our journey that began 2.5 years ago is where we are today. Just a word about what I believe about RWA. I think I believe that we live in a sort of rolling recession for quite a long time. And if you look at the past in finance, all the time, crisis has been solved by innovation. And we have a stage where RWA actually have a sort of barbell, so to speak. And I'm saying the barbell is that on one side, you have people who say, like BlackRock, you know what? Let's transform crypto into TradFi instrument, so-called ETF, ETP. And on the other side, let's call that RWA. You want to morph TradFi asset into digital asset. Why? Because what you try to achieve is a form of composability that allows you eventually to transact on-chain. So that I think is where we go. I think is not question about that. And I tend to bet that in a foreseeable future, the most part of, well, I'm just not the guy to say so, everything will be available on-chain. The other question is, right, okay, is on-chain, and then what? Why do we do that? And that comes with the question of composability. And composability means, as soon as you have this asset on-chain, what can you do that you cannot do in a TradFi world? Well, the very first thing is the question about collateral. The second question is about what we call the fragment liquidity on-chain. And the third one is about how do we create a framework that allows us actually to interact on-chain in the same way we interact in TradFi world. And that actually brings me back to something that we're working on today that I'm just raised with some other entities. We build a global risk framework to operate on-chain that looks like, if you're familiar with, what we call the standard initial margin model that you have in the banking industry is there, that will allow us actually to give a credit note or credit risk to Vault, Vault being this so-called smart contract within which you can interact with crypto asset and TradFi, and RWA asset. So if I wrap up, I think there's two things. The first of all, you have the raw material, RWA, put this on chain, that allows you to, let's say, expand the composability of the asset classes. And the second step is, okay, fine, but then what? Well, then what? Actually, you can use the beauty and the power of crypto, blockchain world, smart contract logic, and so on and so forth, actually, to combine this asset into something new. And when I'm saying something new, I just want to say a few words about Bitcoin. I define myself as being a Bitcoin maximalist. I think the time is ripe, is where we're working on as well, to create what we call a hybrid product. An hybrid product is a combination of TradFi asset and a very liquid crypto asset. Why? Because I think, or Bitcoin in particular, actually, that's more or less like 2/3 of the market cap of crypto, is not a crypto asset any longer. If you look at the life of Bitcoin, is possibly 30% gold, 60% tech, and actually it does respond to the liquidity cycle and the business cycle. That makes actually Bitcoin a macro asset class. And what we focus on right now in asset management at Laser is how we do combine actually TradFi assets with Bitcoin to create a form of all-weather fund that address this very well-known debasement trade. And when I'm saying debasement trade, actually is a combination of, let's call that hard money, that allows you actually to fight against the structural depletion of fiat currency. So that actually, the two main things we're working on, hybridation of the investment logic on one side, very scalable. I mean, the TAM of the market is about 2 trillion, so that there's a real question. And on the other side is everything about on-chain management. So that actually, at the level of a company itself, you create this sort of convex payout where you can offer different investment logic to investors. It's the two things we see in those days.
Which risks you see in this industry? Because it's growing fast, a lot of new products coming in the market, and how you guys are looking at the risk factors, how you...
Okay, that's a good one. So I will excuse the question about regulation risk, right? Because we're not facing retails. So for us, again, to be regulated is even not an option, right? We're VARA regulated, ADGM as well. So let's keep that. Maybe when it's done, it's done. Maybe it's the least interesting one. I think that, to me, the real risk is as soon as you begin to do things on chain. So let me put it that way. In my opinion, everything is a script. What is a script? Is a piece of paper when you say, okay, that belongs to me. A single stock is a script. A bond is a script. A swap is a script, right? Because you say, okay, fine, you are the happy owner of, let's say, 1 million of NVIDIA stock, but it's just a piece of paper, right? That is what we have for many decades. And then you put this on chain, and you begin to compose these things. But the thing is, as soon as you put this on chain, it's not like you have someone who takes a call and say, hey, what's going on in terms of risk? You have a smart contract that does actually control anything you're doing, right? Because it just relied by machine, by piece of code, and even without talking about AI machines. The problem is, as soon as you do that, actually, the smart contract that operates the vault within which we invest, actually, many things can happen. And actually, it did happen, last month, 10th of October, as you know, with all this crash and all these on-chain things actually completely blew up. The problem is because, and I think it's because the industry is very nascent, the amount of attention that has been paid actually to focus on how the smart contract interact, and now the entire risk management actually is achieved within the vault actually, that is to be, I mean, is quite low actually. The quality is very poor. I mean, the entire crypto world is nascent. So what we're missing here actually is exactly what happened in the past, like in TradFi world, where you have a sort of bunch of banks, asset managers that say, look, we need to address this question, and we need to come up actually with a standard solution about how do we do to give a credit risk to the vault, meaning this lesser autonomous agent that interact with the asset that we put on chain. Right? Okay. And that does not exist. Everyone actually is working on inside. So, okay, that's my methodology. This is mine. That doesn't work, because if you want to expand the market, and I think is one of your question you have, you need to find a way to stop to fragment liquidity. Yeah. Meaning you need to put people around the table and say, probably it's a way to address the question. It's what we're doing right now. So we have this initiative with many well-known companies. We will publish something maybe in a coming next week or two that I think will be the beginning of a standard to interact with the vault.
Okay.
So, yeah.
Thank you so much. Gurpreet, now you guys are global, growing fast. What do you see the future in the next 1-2 years with the institutions? Because what we have seen, it's just recent that the institutions are taking our DeFi world and investment into our industries in the virtual assets more and more. What are your plans? How you see it? What do you foresee for the next few years? The market has not been the best market recently, but how you see the institution onboarding and how you guys are expanding globally to access them, and what is going on in the GCC side from you?
Sure. I think hi guys, my name is Gurpreet. I head Kraken Institutional division. So I think from the institutional side, I think the way to look at crypto is any other commodity, right? As the scale of the commodity grows, as gold, as oil, as Bitcoin, as Ethereum, there's different capital markets that develop around it, options market, derivatives markets, and as they scale, institutional investors, trading firms naturally converge. So I think right now, while the market from a Bitcoin price standpoint might not seem as aggressive, we see every bank in New York, in the US, and Europe want to enter the space. So I think like the space is past that threshold of like growth. Every traditional institution is figuring out their digital asset strategy. Okay. As capital markets, there's more and more capital markets develop around these products. We'll see more and more institutional adoption. More derivatives, more options, more in the CME, more in the Euronext, and we're seeing that pick up. From Kraken's standpoint, right, like our goal is to serve our clients, right? We're like one of the first exchanges, never been hacked, highest level of security. So we take things seriously. For us, it's like where we can serve our clients. We have needs. We have clients throughout the world. We're getting our wire license soon. We're entering the GCC, and organically, we'll scale our business across every country in a regulated way.
Great, thank you so much, guys. The RWA market, very hot. Everybody talking about it. No liquidity, they say. There's a lot of comments. There's another hype coming up. I feel like back in 2016, 17, as crypto started, some believe in it, don't. How you guys see the RWA market coming up? Because the real world asset tokenization, everybody are familiar with it. We see properties going in, gold mines, XYZ, and we see a lot of those. They approach us, how we tokenize, how gonna move into this market. What are you guys foreseeing? How you are, because the risk on that side for me still is a big question. Who is issuing, where they issue from? The issuance license in the UAE has not been that easy so far. We have coming out of Cayman, out of BVI, out of various jurisdictions. How are we going to secure that? How is the market expanding on that? What your companies are looking at the RWA market in the future? Starting with you.
That's a great question. I think Sebastien also touched on this. I think in crypto, we have a siloed, we're building in silos, right? And I think October 10 event was a big kind of proof of that. we like to say that we're better than the traditional markets, but in terms of consolidation, in terms of integration, we're not. Today, if you're trading on the largest DEX or centralized exchange, the other exchange has no idea what your book has. You're really kind of siloed there, right? So I think moving forward, and I'm going to tie this to RWAs, because RWAs today are, in my opinion, it's a tricky term, and we have to be careful, right? Because it's a late cycle phenomenon that's being used now in terms of a very catchy word again and again. And it's very easy to build a solution for a problem that doesn't exist, right?
Exactly.
This is kind of the founder number one problem, right? So let's look at what works. Like, what is the biggest proof of an RWA? A stablecoin, right? I mean, people don't associate a stablecoin to an RWA always, but it is the best RWA we have today. Like today, there was a need for this dollar on chain to be tokenized, right? And we can see the distribution, right? It's the bank of the future. Tether is probably going to be one of the most, the largest valued companies soon. So I think we should kind of tie parallels with how that worked and how that gave, how that added value instead of just creating value from hype. Because RWA is access. It's not really value, right? So when someone comes to you in Dubai, says, I'm going to RWA my hotel, and then the second day I'm going to sell it, it's not going to sell you your hotel,
happen.
So yeah, this is kind of
The
our view on
imaginations
it.
are everyone something and within minutes, and that's really fun to explore. We have classic cars, yacht owners, everybody, and they think that they can tokenize it, and the market would just grab it and take it over. How we can ensure that? What is your policy on RWAs? How we can secure those projects, or what do you feel about it? Because RWA is just, for me, a word that everybody are using, and I think it has not been really defined yet. It's just a hype that everybody misusing or using it, as we know.
Yeah, and I agree with what George was just saying. Coming out of the crypto winter of 2022, 2023, before that, it's like people would ask me, like, okay, cool, crypto, but what's the killer app? You had NFTs and meme coins and lots of speculation. It's like, show me the killer app. And what has really evolved coming out of the crypto winter, I think, as we know, essentially was the proliferation of stablecoins, led by Tether, with micro wallets and the unbanked and developed countries, exactly what was supposed to happen. And then Bitcoin is a store of value, right? Now there's a ton of talk about RWAs, even just starting with tokenizing securities. I heard BlackRock talking about the efficiencies they've gotten on how many securities they transact and settle a day. And they've gotten it pretty micro tight. They're not going to save a bunch of money somehow by tokenizing securities and having atomic swaps. So where, after this is the big buzzword right now, where do we think it's going to play out? For us, just in practice, even though we're insuring the crypto industry, we're still out of Bermuda, very old school, bilateral insurer with brokers. And when we issue a policy, we stamp and sign it bilaterally out of Bermuda. So we're not doing anything on chain to benefit from that. Another point I wanted to make is that for us to underwrite in Bitcoin or Ethereum, we have to hold regulatory capital in Bitcoin and Ethereum. And reg cap providers, this is a way of Bitcoin to be a store of capital rather than just a store of value. So people who understand insurance or reinsurance returns, they can provide the Bitcoin. And if we underwrite well, the premiums are more than the claims. You start compounding 6 to 8% of insurance returns on your Bitcoin. Now, that's for large, sophisticated whales, OG, big Bitcoin holders who are like, I want to start getting some yield on my Bitcoin outside of the perpetual basis trade and call writing strategies and all that sort of stuff. For us, we're going to tokenize that reg cap.
Okay.
and then be able to distribute that and secondary trade it, firstly with sophisticated investors, but then ultimately be able to put that on chain. And for me, it's democratizing like capital and access to individuals who might want to do $100 worth of, or 10 satoshi, whatever, and democratizing access. And I think that's the important part of RWAs. I think about like meme coins, right? It'll be very powerful when an artist, Taylor Swift, Beyonce, anybody, drops a meme coin, and that gives you not only access to front row seats at the concerts, the first listening, access to video calls, but also through smart contracts gives you a percentage of the royalties of that album, right? And I think that's where the technology will benefit of, instead of somebody getting paid $250 million to do a movie, you can raise that capital because everybody wants to have a little piece of that next movie. And if it does well, just on chain and through smart contracts, your royalties and benefits flow to you. But it's really been hype and talk up to now, in my opinion.
I think you're part of a company that's tokenizing IP rights,
Yes,
right?
we started recently to do some. It's called Vero. It's a social media that we are looking at IPs, IP tokenization, starting with Star Wars game and so on.
Yeah.
Those are the things for me on the RWA side would make much sense because people would engage in the next game, engage in the next album, and but has not been an easy task because when you get involved into issuing securities, then you face the problems of regulation, and because each country runs a different way, and they call it passporting.
Yeah.
It sounds easy, but it's not. We have gone through over 2-3 years to manage that globally, and it's no solution is global. It's like, unfortunately, still we have those barriers that I hope sooner or later there will be better solutions for that. Now, Gurpreet, how you see you guys with the RWAs and everything? Are you listing them? You're not listing them? Any plans coming up on the institutional side of yours?
Sure. No, it's a great question. I mean, I look at like supply and demand, right? I think what we tokenize first, as you mentioned, stable coins, right? It's currencies. Then it's stocks. We have X stocks. We tokenize equities and have distribution. Anybody from Nigeria, from Afghanistan, from Bangladesh can now buy U.S. equities. It's the largest market in the world, right? So I think, for us, obviously, we're going to look at every asset class in a compliant way and how big the TAM is, how big the distribution user base is, right? And go one by one across these different verticals. So stable coins, equities, and then obviously as, I think different fixed income products, different bond products, I think they'll be probably next in line. And
Okay.
regarding, your question about real estate and stuff like that, I mean, the reality is, right, I feel like there's no bid and supply. There's no market making on real estate, right? If somebody wants to tokenize your hotel, is Jane Street going to make a, supply bid and ask for that, right? So like, I feel like a lot of people in this space are working on something which, there's not a problem for. And, right now there's plenty of real estate investments or SPV. So like, I think you need a standardized product, a big enough target addressable market, and like in something which, there'll be a bid and ask spread, right? And I think going through that, stable coins is tokenized equities, and tokenized fixed income is probably next.
Okay, lovely. Thank you. Sebastien, we were before chatting about computing, DeFi, and I would love to hear a little bit more about it. We had a short chat before, and I thought to bring this topic. It is market expansion in a different way, but would love to hear more about that.
Right. So going about DeFi, as I was saying, we focus on two things. On one side, this hybrid fund, very Bitcoin-centric, with the aim to do something which is scalable. And on the other side, try to find out some, wording, convexity in the market using the broad DeFi technology. To do that, basically, what we're doing, we have again two solutions. One which is very technical. We are into what we call DeFi trading. So we do things like SEX arbs or what we call just-in-time liquidity arbs. But the thing is, those things actually they are very hedge fundy in the sense that I'm coming from hedge fund industry. I'm old enough. I was running in the past of the internal hedge fund at BlackRock's BGI. I was running the derivatives one. I spent many years at Mouawad. When I was younger, I set up the first volatility arb fund in France. I come from this world. In DeFi space, actually, the other things I'm doing right now is what we call the curation and on-chain asset management, where I feel that is more scalable than what I was mentioning when you do technical things, because reality is that the liquidity is not there at all. I mean, it's good if you're a market maker. It's good at if you're hunting for high return. I'm saying high return. I'm talking about things that are out of reach for TradFi. I talk about things with like 50, 70% return with sharp ratio around above 10. But the thing is not scalable. It is not real product. Now, going back to DeFi and stable, in my opinion, there is nothing about stable coin. I think the new narrative is about a risk tranching. And I'm old enough actually to have been through the CDO crisis, because in those days when I see people, I say, oh, you know what? I build a stable coin and my stable coin is backed by basis trade. Well, actually, I say, well, the only thing that you try to do, actually, you try to create a sort of, I call this a PB on chain, a prime brokerage facility. Why? Because you have something, a collateral, and what you want to do is, how can I use that in a different way? And you want basically to increase your leverage. So, and the entire story of DeFi, but shall I say the entire story of financial world, what is it? Is to increase the velocity of money. And it's all what we're looking at, actually. How do we do to increase velocity of money? So in our case, actually, what we're doing right now a lot on this on-chain curation is more about how can we do, actually, to come up with a risk management framework that allows us to do simple things or even simple leverage operation on-chain in some vaults. Right. So we work. I think there is an angle here. If you want to build, let's say, a sort of leverage beta, for example, words you have, let's say, ETH, you have stake ETH, and how many times you can do that so that you can increase your exposure. But what you do, what you try to achieve, forget all this complexity, stable coin or whatever, tokenization, and just go back to the very basic question: what do you try to achieve? What you try to achieve is to increase your leverage. And how you do that? Well, you have something, your wealth, and you put this at work. And I think is one of the most central questions about Bitcoin. There's many ways to talk about Bitcoin. What is it? What is not? I think money is a representation of energy. Why? Because money is a debt, is a promise. And Bitcoin actually is probably the hardest form of decentralized money, while Tether is probably one of the best forms of centralized money. So you have actually two forms of money, something which is decentralized and something which is centralized. The problem with Bitcoin in those days today is that, okay, you have Bitcoin, and so what? What do you do? I mean, back then, before joining Brevan, I was in 2012, actually, when I tried to buy for the first time a Bitcoin. I couldn't, actually. If you're the OG and IP owner of Bitcoin at the time, it's fine. But those days actually is like you sat on a pile of cash, and what can you do actually? And it's why I think to go back to what you said, and so there is question about how can I do to create a yield on the top of Bitcoin. And I think one of the next phase in crypto is what I call the fixed incomization of crypto. What is it? Simply put, is how can I do to extract a form of stable yield from an amount of wealth that I was accumulating for the last 10 years. So I call this fixed incomization of crypto. It means that you have let's call about the OGs, that to me, I'm a bit radical. The only thing that matters in crypto is Bitcoin. The rest is a sort of distraction, Why? Because it's just 2/3 actually of the market cap. And to me, Ethereum as well, but to me, is probably this. And you go back to white paper of Satoshi Nakamoto as a sort of peer-to-peer payment system. To me, is the only true innovation. And all the other cryptos actually, what do? They compete somehow to look like a reserve currency by extending the network effect, right? True. The truth is, the only thing actually that does expand the network effect was Bitcoin. So back to DeFi, we work on this yield generation process on chain, and as well this sort of leverage beta. But again, what I was saying, it comes with all this risk management issue. After the 10th of October, and I'm sure that you guys, you know that many issues took place in the market, many things actually completely implode because of the stupid leverage in the vault and all this mechanism of auto-deleveraging that actually we've seen in exchange as well. And that needs to be sorted out.
True. Thank you so much. Because we have a few minutes left, but what do you think about, I started with you, Gurpreet, there's so many stable coins coming out. Do we need it? I mean, each company who have a little bit of asset, they back something, and we have from the dirham, from US, there's at least 30, 40 of them I know that in different currencies out of different jurisdictions. How you guys manage that? I mean, this is like, do we need them? Will they survive? Will it be a usage for it? Or will we keep with the USDC, USDTs, and the others don't have a chance?
I think it's based on liquidity, right? I think if you want to sell 500 million of Tether today, you can execute that trade within like minutes or seconds, right? If you have a new stable coin with no liquidity, there's no users. So I think just, I think times change. I think, obviously in UAE, they're launching AAD stable coin. So there's a place for it, right? There's a lot of the whole closed loop ecosystem in Abu Dhabi, which they're trying to develop with the stablecoin here. So I do see innovation happening. It's hard to predict who will be the winner, who will be the loser. But obviously, what's most important for a venue like ours is liquidity, right? If you want to, onboard a stablecoin in Kraken, for it's important to see how liquid it is, what's the user base, and how much money can go in and out very quick.
Okay, thank you so much.
I mean, from my point of view, I agree with Sebastien on kind of the fundamental value is around Bitcoin and the space, and there is this concept of trying to increase the velocity of money via stable coins and other assets. I think for me, these little stable coins kind of popping up right and left can only be kind of part of a customer acquisition strategy. So even traditional tokens, like if you look at Web3 tokens, memes, all these things, they don't always make money as a siloed project, but they bring you customers via a spend that you can cross-sell into something else, right? So I think when you're an ecosystem with your own closed loop, like locally in AED or etc., having these rails and investing into them is kind of like, putting a marketing spend and giving someone, they can come to your brand and then you have a lifetime value associated to that client. So that's how I see it in terms of these little ones that don't have liquidity, as was mentioned. But for the large ones, I think it will be like a case of the big ones are going to dominate. And yeah.
Yeah, and I would just add on stable coins very briefly, Tether's success, in my opinion, was demand-led. And once again, it was for the unbanked who had a self-hosted wallet on a smartphone and wanted to do micropayments in places where they were unbanked. And so the proliferation of micropayments and smaller than $100 balances went absolutely globally viral. And that demand, whether it's in North Africa or anywhere else, it was the dollar. So supply side, you can't say, well, we want to create a euro stable coin. Will you use that? That was demand led. I want to cycle back very quickly on DeFi, where and I love the borrowing and lending protocols like Aave and Compound. Aave's launching an app, which is where Web 2.0 meets Web 3.0. So you don't have to on-ramp, off-ramp, get a Ledger Nano, have a MetaMask wallet, and interact with the protocol, which worked great during 2022. It works great in flash crash if the smart contracts behave how they're supposed to, and DeFi worked just great through all of that. But when you're taking unsophisticated investors and linking their bank account and just an app on their phone say you can get Aave yield, what they've just announced is that you're going to be able to link your bank account where your deposits are insured, and then your stable coins are going to be insured up to $1 million on the Aave app. And that's sort of encouraging broader retail, unsophisticated, not crypto bro adoption of getting access to DeFi, but it has the guardrails if their only route in is through Web 2.0.
Very interesting.
Lovely. Thank you so much. Back in Europe, we have now the regulation that every wallet needs to be certified and AML and KYC needs to be done. And we see a lot of people like avoiding now to move into our scene. Sebastien, how you see that with the whole KYC AML regulation versus technology? Where are we heading to? Would that harm actually what we are doing? Because the concept of DeFi, bankless, going global, having your wallet now is like your bank account official that you need to register directly with the finance department. How you see those? Because on institutional is different. They know how to do it. But for individuals, we see a lot of people that are moving out of this part because of the whole regulation coming. Can you comment on that one?
Yeah, so a few things. As you hear, I'm French. So, I mean,
Je peux te traduire si tu veux.
no, it's fine.
En français.
I've been very concerned and quite negative about where France and Europe is heading towards. I mean, it's just very concerning. But as we know, you know the quote, right? US innovates and Europe regulates. And I think there's not much to add to that, right? It's a sad reality of an entire zone, actually, that where you compare the GDP growth over the last decade, it's just a lost decade, right? There's nothing much that we can do. Now, talking about KYC AML, and I just jump on the last question about how do you do when you interact with DeFi space. Fortunately, in those days, even though if you do complicated things for us, which is, let's say, technical things such as we arbitrage price between SEX, central exchange, or DEX, like Uniswap, or we provide liquidity into pools, right, at the right time. We call it just-in-time liquidity. We have tools, actually, that allows us to assess the quality of the pool in terms of toxic money, which is somehow actually a real-time AML of the pool we're interacting with. So I think that the market is evolving in a good direction. But I want to say something that I'm just quite concerned about this extreme ideology about obscene transparency. You know, this is because risk management is something, obscene transparency with dystopia is something else, right?
Yeah.
So crypto came up with this technology called ZK, zero knowledge proof, that allows you to prove things without actually disclosing what you prove. And I think that is possibly the best answer that you can deploy into crypto if you want to be faithful to the original idea of crypto, that was to bring a sort of a libertarian concept into the financial world. I'm a bit philosophical here, but I think it's important to notice.
Gonna be different. You wanted to say something?
Yeah, I just wanted to say, so I come from Lebanon, obviously, and it's a tricky question because you want transparency, but at the same time, you don't want your government to take your money and send it to Switzerland, which is what happened with us, right? True. So there is a difference between, I think, someone accessing your funds and knowing about your funds. And I think ZKs and these techs are interesting to think. But I think this is the most important question for our space, to be honest, is this one. Like, how do I keep access of what's mine, but at the same time not be radically, in this ideology that I have to hide and everything? And hopefully we'll figure it out.
Inshallah. I thank everyone. If anybody want to add something, you have 11 seconds left. It's already red. Thank you so much. Thank you. Thank you for listening. And then see you guys soon.
Yeah.
And thank you for your
Thanks
time.
very much.
Thank you.
Appreciate it.